So hello again. Thanks for tuning in to the RCLCO YouTube channel and joining us for our September housing markets update. As you can see on the slide here, relative to what we were talking about last May when we were very excited about the upturn, that upturn has continued with even greater strength. Initially, we thought we were making up over the summer for the losses that we experienced in March and early April. But now the market really is exceeding those levels that we saw, and really we're in a very strong housing market. We've not seen the market back on a million sales pace in many years. Big question on everybody's mind is, can this be sustained? When we look at only 3 months of supply of new homes at the current pace, and we're reminded when we think about where we were about this time in the Great Recession, when we had more than 12 months of inventory. That, of course, was more of a housing-led recession. This time around, housing really is doing a lot to lead the economy in the recovery so far. And at least as far as housing is concerned, it has been a V-shaped recovery. Low interest rates are certainly driving this, as is positive demographic tailwinds that'll be with us for some time. And also there seems to be some flight to safety or flight to the suburbs, with people thinking they either want to get out of denser areas or closer in areas, and maybe less concerned about commuting, given that they're probably not in the office, or if they're in the office, they're in the office less than they used to be because of COVID-19. Also, kids are at home. Many kids are back in school, but some are going to school remotely. Even some college kids are doing remote school. And so the family home, mom and dad's house, has become the place that people are getting together and gathering once again. And people who maybe were thinking, at some point we need to upgrade our house are going for it now. And we're seeing that translate big time in the sales numbers. Housing demand is strong. One of the things that we're concerned about, of course, is that housing supply is not strong, and new inventory being fairly low, that's keeping prices strong, and price appreciation has been pretty strong. And eventually that's going to have some impact on affordability. Also, we're hearing a lot about lumber prices lately and other costs, and builders are certainly challenged by those growing costs. That leads us to, again, wonder how sustainable this is. But from a demand perspective, there seems to be plenty of housing demand at this point in the cycle. As you can see on the next slide, there's a big regional variability to where this is taking place. So the Northeast has picked up a bit. The Northeast is a much smaller housing market overall. When we look at the Midwest has picked up as well. But really, the big increase has been all across the South, from Texas to Virginia, certainly down in Florida, Carolinas, really booming. Talking with a Texas developer client of ours the other day, telling us that their sales, in fact, are 100% greater than they were this time last year. And then you see it not quite to the same degree, but certainly a very strong uptick in home sales in the South, in the West rather, in the green line on the chart there. On the next slide, you can see the what was forecast by Fannie Mae recently in terms of where they think this is leading. So you can see 2019 sales, even the third quarter 2020 forecast, which is just from a few weeks ago, turns out to be low relative to where the numbers are actually coming out now. And at least based on where demand seems to be coming out, we think we could be looking at a very strong 2021. Some things that we're looking at and following quite closely to mitigate our optimism a little bit is looking at those rising costs I mentioned a minute ago with lumber prices. The fact that lot inventory is diminishing, particularly lower priced lots. We're kind of running through a lot of the lot inventory that was in existing phases of developments and existing in master plan communities, and now getting into needing to develop more lots. And so lot prices may impact affordability. and the fact that lumber prices need to be passed along to consumers. Lumber prices alone can easily add $10,000 to $15,000 right now to home prices. And of course, how well a handle we get on COVID-19, there's a lot of speculation as to what sort of fall and winter we'll have with the whole coronavirus. Do we continue to get a handle on cases? Do cases continue to fall? Do we continue to see treatments improve? And does that continue to keep consumer confidence high? Or, if there's a delay in the development or deployment of a vaccine or an increase in infections, that could certainly result in reducing the rate of growth in the economy overall, which could translate into these housing numbers. Meanwhile, low interest rates are certainly a strong inducement to buy homes. The slow supply growth, continues to be something that we're concerned about. We really need to be producing more houses than we are to keep up with this demand. In fact, we were already producing at lower levels than we had been in 2019, really prior to this spike. And then with March and April sales declining as the coronavirus first hit the US, and there was a little bit of a deer in the headlights moment of everyone sort of trying to figure out what's this really going to mean. That hesitation has led to lower inventories overall. And so in order to sustain this and to meet the kind of numbers that Fannie Mae is showing here, we really need to pick up the pace in order to meet this demand. You can see on the next slide where existing single-family home sales have gone. And again, like the new home market, there was a significant dip in March, and it did not come back quite as quickly as the new home market, but really picking up in May and over the summer. And right now, as of the most recent data, which just came out last week, about 10% year over year, showing pretty strong gains. And this is one of the things that's keeping the pressure on the new home market. The fact that the existing single-family home market is so tight. People still somewhat concerned about having strangers coming through their house, and at this period of the health crisis, and that's kept some people from putting their home on the market. And inventories were already tight. We were at around 5 months coming into this boom of inventory, and that's continued to slide down. As you can see on the next slide, inventory for existing homes, just over 3 months of inventory. That's very low. Typically, as you can see on the chart, back in 2019, we hovered around 4 months of inventory at the current pace of sales. It did spike up a little bit in May simply because the pace of sales slowed down so much in March and April. But those inventories have quickly worked off, and that housing demand being strong, that imbalance, again, just as is happening on the new home market, the low supply is really making this somewhat of a seller's market. We expect it'll continue to be a seller's market into 2021 easily. On the next slide, we've summarized where condo, townhome, co-op sales are going, and it's the same pattern that we saw on existing single-family home sales overall, with really picking up quite significantly in May, and then really easily exceeding the pace that we saw in 2019, with total home sales overall, and condo and townhome and co-op sales having more than recovered. On our last slide here, contact us if you have any questions about this analysis. I would love to hear from you. If you like what you see here, we try to update this residential market analysis every month as new data comes in. So if you enjoy this, please hit the subscribe button there. And if you have any questions or comments about this, shoot me an email or give me a call. Phone numbers on there, or visit our website, www.rclco.com, and see all the other resources that we have here. So thanks for tuning in, and look forward to seeing you next month.